people are losing their jobs just before the election. So they're not going to say that. But yes, they're seeing it for sure. And, obviously, but we mustn't forget that the inflation numbers are probably tweaked as well to make them seem a lot lower. I mean, it depends how you measure inflation, but the way I look at it, we've got the level of government debt rising by 7 or 8% a year at the moment. That's 7 or 8% more wealth on the planet, if you like. So how could the inflation rate be only 2%? Well, they're not measuring everything. I mean, if you ask the average Joe about his grocery bill or the price of fuel or what it costs to go on holiday, they won't tell you that it's gone down.
You're watching Silver News Daily. Subscribe for more.
Did you know silver could be on the brink of a historic breakout? Financial experts, including Clive Thompson, are sounding the alarm with predictions of silver reaching all-time highs, surpassing levels not seen in decades. But here's the twist. It's not just inflation or the dollar at play. Unprecedented factors are aligning, and you're about to discover what could drive silver prices to new records. Stick around because in today's video, we're breaking down everything you need to know about this explosive prediction for 2024.
But the number of government jobs year over year has gone up by 437,000. So we've got 500,000 extra jobs in the government, yet including the government jobs, we've got 123,000 people less working. So that to me tells me the economy is slowing. I think that's the first thing. The second thing, of course, is the interest rates that are now being reduced. We've had a reduction of 0.5% in the federal funds rate, and we're expected to get another one, 0.5 quarter before the end of the year. And the market is expecting more interest rate cuts as the year moves on, next year moves on. That normally is very good for asset prices. So on the interest rate front alone, I think we can be positive on the asset prices in general. But of course, the reason they're reducing interest rates is the official inflation number has come down very close to their 2% target. And the official non-farm payrolls reports are showing fantastic numbers month after month, even though everybody knows that as we go into the next month, they'll reduce the current figure, as they always do. Almost every single month, they reduce the current figure, the previous month's figure, to make the current figure look that much bigger. So we know that the figures which are announced month after month are always revised downwards, making those numbers a lot less. But don't forget, non-farm payrolls report is counting the number of jobs, not the number of people who are working. So the fact that the number of people working is falling and the number of jobs is going up tells us that the few remaining people.
Let's dive into some recent history. Silver has seen some ups and downs, but what happened recently was a game changer. After months of stagnation, silver broke past a critical resistance level, $32.50 per ounce. Now, this might just sound like another number, but here's why it matters. Breaking past this barrier signals a shift in the market. Historically, when silver crosses key resistance levels with strong volume, it often marks the start of a rally. And get this, trading volume didn't just increase, it doubled the previous week's average. That means serious buyers are stepping in, and we could be witnessing the first spark of a much bigger bull run. Experts are even saying that $50 per ounce is in sight in the short term. Imagine the impact that could have. And if you think silver is following the same old patterns, think again. This breakout is happening amidst unique global conditions we haven't seen before. So what's behind this shift? And could silver really soar as some are predicting? Keep watching, because the factors we're about to uncover are set to shake things up even more.
When you look at the numbers, knock off the government workers, make a small reduction for the people who've gone to part-time, you'll find that the unemployment numbers have gone up a lot, and the employment numbers have, the people who are working full-time have gone down literally a lot. I've got the numbers here, if I just going to bring it up if I can. So according to the government's own statistics, we have, as of September, and this is their table A1, according to the government's own statistic, we have 487,000 people, sorry, 487,000 more jobs. Sorry, big one, that's unemployed people. 487,000 more unemployed people than we had a year ago. We have an additional 850,000 people who've dropped out of the labour force. And we've got 130, 850,000, 850,000. And we've got another 1.3 million who've become disillusioned. They're looking for work, but not classified as unemployed. I'll just bring up, just bear with me for a second while I bring up another statistic here. As of September this year, if I look at the non-farm payroll, not the farm, the Bureau of Labour Statistics household report, we had 123,000 people less working full-time than we did 1 year ago.
Now, let's pull back and look at the big picture. The global economy is in a turbulent phase, and silver, often seen as a safe haven, is starting to draw serious attention. Inflation, while officially reported as cooling, is still impacting daily life with higher costs on essentials. People are feeling the pinch, and central banks are taking note. In response, we're seeing a shift in interest rate policies, with rates starting to ease in the U.S. and potentially abroad. Lower interest rates typically mean a weaker dollar, and that's key because when the dollar loses strength, silver prices often get a boost as investors seek out alternative stores of value. But that's not all. Employment numbers may look strong on the surface, but if you dig deeper, you'll see the cracks. In the U.S., for instance, a rise in government jobs is masking a downturn in private sector employment. This kind of instability is making people nervous about the future, and whenever uncertainty hits, metals like silver tend to become more attractive. So, with inflation persisting and central banks adjusting their playbook, silver's appeal as a hedge is growing. But there's more to this story than just a safe haven. The forces we're seeing could set silver on a path to break new ground. Stay tuned, because up next we'll explore how growing industrial demand is pushing silver into the spotlight like never before.
If we look at the US economy, we have a slowdown going on, despite the official numbers. They recently raised the GDP numbers for the last quarter, but the real number, I think, relates to the employment numbers. People should not be believing the non-farm payroll numbers as an indicator of how many people are employed. There are significantly less people employed in the USA today than there were a year ago. There are significantly more people unemployed, and those figures are there for all to see if you look at the household report from the Bureau of Labour Statistics, which explains, if you burrow down, where those super numbers from the non-farm payroll are coming from. And I can tell you in simple terms, the numbers are looking very good when you look at non-farm payrolls because of, firstly, the huge number of government workers they've employed in the last year, which have goosed those numbers significantly. Secondly, they're including in those numbers the number of jobs. But if you look at the number of people, if you look at the other statistic, which is the number of people working, and of those number of people who are working part-time, there's been a very significant amount, percentage, who have gone down from full-time employment to part-time employment. So
let's talk about one of the most powerful forces driving silver right now, industrial demand. You might think of silver as just another precious metal, but it has a unique dual role. Unlike gold, which is mostly a hedge, silver is indispensable in any high-tech and green industries. Think about solar panels, electric vehicles, and even 5G technology. All of them need silver to function efficiently. As countries ramp up their green initiatives and tech advances, demand for silver is skyrocketing. Here's an eye-opener. Demand for silver in solar panel production alone surged by 15% last year. And this isn't just a one-time spike. With governments worldwide pushing for renewable energy, that demand is expected to keep rising. Electric vehicle production is another huge factor, as these cars require silver in batteries and electronic systems. Add in the growing need for silver in electronics, medical applications, and even water purification, and you start to see a much bigger picture. The supply simply can't keep up with this level of demand, creating a structural deficit that has some experts thinking we're on the edge of a major price surge. So, as industrial needs continue to grow, how will this affect silver prices in the long term? We'll dig deeper into this in the next section, where we'll examine the challenges facing global silver production and what they mean for investors.
News coming out of this, but rather more a sense of direction that we want to be able to trade between ourselves in our own currencies, and then possibly to assure ourselves that one country isn't devaluing its currency faster than the other to get a competitive advantage. We want to ensure that the countries which are doing this have a certain amount of gold backing for their currency. Hence, that's why the BRICS are buying gold anyway. And possibly we want the ability to not only exchange currencies, but the ability to exchange in a currency with some gold backing. So we'll see which way that goes. It obviously take some time, but direction of travel, I think, is away from the dollar and towards gold.
And then you mentioned silver, that you think it's gonna, it's broken out of pretty sure it's a trend or it's broken highs of the last 10 years or something. So what do you see happening there?
So we had an amazing day on Friday. Silver for a long time has been stuck in a trading range and really not going very much higher. 32.50 was the resistance point, and on Friday it crashed to after Europe had closed. It crashed to the 32.50 level. It was trading at 33 in the high 33s. So it's well above that resistance point, and it was about nearly 7% higher on the day, with most of that gain coming in the evening after Europe had closed. So first of all, for the very short term, that must be giving those who are short, and that this will be the big boys, the big bullion banks who've gone short silver, it'll be giving them some there'll be discussions about internally as to how they have to reduce their positions, because nobody wants to be at the wrong end of things. I don't think they're going to get rid of their short positions, but they'll certainly take them down a bit now that silver's moving higher. But I think the other thing to note is that the deficit between mined production of silver and industrial use is destined to get larger year by year. For the first time in many...
Now, while demand is booming, the supply side tells a very different story. Global silver production has been on the decline, and it's not showing signs of recovery anytime soon. Mining companies are facing a range of challenges, from skyrocketing operational costs to increasingly strict environmental regulations. This squeeze on production means that even as demand rises, the available supply is struggling to keep up, setting the stage for a supply-demand imbalance that could drive prices higher. To put it into perspective, the Silver Institute reported a supply deficit of over 215 million ounces for 2024. That's a substantial gap between what's being mined and what's needed. And here's the kicker. Increasing production isn't as simple as flipping a switch. Opening new mines or ramping up current operations takes years, if not decades, due to the extensive regulatory processes and hefty investment costs involved. So we're facing a scenario where demand is set to grow, but supply is constrained. A classic setup for price increases. Could this deficit mean we're on the brink of a silver shortage? And if so, how might that affect the market in the near future? Stick around as we examine how the movements in gold, a close cousin to silver, are adding fuel to this fire in the next section.
What that will buy in 10 years? Well, we don't know, but I know it's going to buy less, and probably with the rate things, speed things are going, probably a lot less. And I think that's the general feeling. And of course, central banks around the world are reducing their whole exposure to the US dollar. It's currently globally, it's currently at 57%, which is the lowest level in 25 years. So that trend could continue. We've got the BRICS summit in I think it's Kazan, starting tomorrow. I think it's today, actually. Goes on for 3 days. There are there's certainly rumors that they might be talking about a new currency called the unit, which might be backed 40% by gold. We don't know if that'll happen, but the discussion will revolve around ways to do trade without being forced to use the dollar for everything, because of course the dollar has now become weaponized, and it doesn't matter what country you are, you never know when that weaponization may restrict the way you can trade. And therefore, these BRICS countries and all their friends will be looking for alternatives to the US dollars. Now, it will take a long time to set up an alternative to the Swiss system, but it'll certainly be a topic of discussion. I don't see any major.
Let's shift our focus to gold, silver's close relative in the precious metals world, and explore how its recent performance could be adding fuel to silver's rally. Historically, silver often follows gold's movements, and when gold is on the rise, silver tends to ride the momentum. This is especially true when economic uncertainty is high, and gold's role as a safe haven becomes even more prominent. Over the past year, gold has broken through significant resistance levels, drawing a wave of new investors looking for stability. But here's where it gets interesting. As gold continues to climb, some investors see silver as a relatively undervalued alternative. Gold may be the go-to hedge, but silver offers a unique blend of precious metal safety with the added benefit of industrial demand. In simple terms, when gold gets too expensive, many investors turn to silver as the next best option. This ripple effect means that every uptick in gold prices could draw more eyes and money to silver, accelerating its upward trajectory. With both metals positioned for growth, are we looking at a perfect storm where gold's influence could catapult silver to unprecedented heights? Keep watching, because in the next section, we'll delve into the role of short positions in the silver market and how a potential squeeze could turn this rally into something truly explosive.
The level of government debt in the USA, there's no plan to at the moment, there's no plan to cut the deficit. The Bureau of Labor Statistics has forecast that the debt is set to grow at a much faster pace over the coming decade than the level of GDP. So the economy is growing at a certain pace, but the level of government debt is growing faster. The reason for that is there's no current plan to rein in the spending, and there's no current plan to increase the taxes, at least not enough to stop that deficit from rising. And of course, the other thing which is helping the yearly deficit rise, that's where spending exceeds income, is the interest on the national debt. The interest on the national debt is rising rapidly due to the fact we have a lot of debt which was taken on by the government over the last decade when interest rates were close to zero. And those interest rates are now much higher than zero. Effectively, they were talking about 4 to 5% at the moment. So as that debt, which was borrowed, where they borrowed money at 1 or 2 or 2.5%, matures, they have to refresh that debt at the new higher rates. And that's causing another problem for the deficit spending. It's contributing to the overall increase in the deficit. And there doesn't seem to be any particular way out for this, not in the near term. So the only solution is to keep borrowing more and more to pay off the old debt and to pay the current deficit in spending. But where does it end? I think we're drawing to a close soon.
Now, here's where things get even more exciting: the potential for a short squeeze in the silver market. Just like what we've seen with certain stocks, a short squeeze can send prices skyrocketing in a short period. And right now, silver might be set up perfectly for one. Major players, like swap dealers and big banks, have been holding large short positions in silver, essentially betting that the price won't rise. But with recent gains, they're starting to feel the heat. Here's why this matters. When these short positions face upward pressure, holders are forced to buy back silver to cover their losses, which can push prices even higher in a feedback loop. Jesse Colombo, a respected financial analyst, has pointed out that swap dealers hold their largest net short position in over 8 years, equivalent to nearly 23% of annual global silver production. Think about that for a second. A significant chunk of the world's silver is essentially locked in these shorts, and any rapid price movement could force these dealers to buy back massive quantities of silver further tightening the market. With such a large short position on the line, the conditions for a squeeze are building. Could we be witnessing the setup for a silver squeeze that pushes prices to unprecedented highs? This scenario adds a whole new layer of potential to the silver rally, and if it unfolds, we could see rapid and dramatic price movements. Up next, we'll explore how global economic uncertainty and shifting currency reserves are adding even more momentum to silver's rise.
And buyers turn up and drive it higher. So it's making new all-time high month after month after month. And I don't think it's the public at large who are buying gold yet. Apart from the last couple of months, we've been seeing over the last 2 years net outflows from the gold ETFs. So they're selling gold, the public. So someone else is buying. And I think what's going on is central bank buying. Central banks currently have been buying more gold than they've ever bought before this year. And that, I think, is going on. I think they've got to a point where they have worries about the level of the level of the US government debt. And they're saying we need an alternative. So they're putting gold into the portfolio instead of treasury bills or treasury bonds. And of course, silver has, I don't know how many of your listeners are watching silver, but that's had it's broken out from its trading range the last few days. The top end was 32.50, and it just broke out. It's trading well above $33 as I speak. And I think that's heading to a much higher level.
Yeah, and when you say sort of the governments are the ones buying the gold, that seems to be not the Western governments. It seems to be sort of more the, I guess, the BRICS and other countries who are dipping into the market.
That's true. China's taken a pause in the last few months, but the net buying is continuing, and I think that will carry on. I mean, I think there's just a general unease that nobody is addressing.
As we zoom out to the global stage, there's a wave of economic uncertainty fueling silver's appeal even further. Around the world, geopolitical tensions are simmering and many nations are starting to rethink their dependence on the US dollar. This shift, especially among BRICS countries, is pushing central banks to diversify their reserves, and precious metals like silver are becoming increasingly attractive alternatives. Why does this matter for silver? Well, when the dominant reserve currency, the dollar, faces skepticism, investors and governments alike look for safe assets that can preserve value beyond fiat currencies. Gold has traditionally been the primary choice, but silver is now emerging as an alternative reserve asset, especially because of its affordability and industrial uses. Central banks in key emerging economies are buying up precious metals to reduce exposure to currency risk, indirectly boosting demand for silver as a secondary reserve. This shift away from the dollar isn't just theoretical. We're seeing real moves. If this trend continues, silver could benefit tremendously as nations seek a more diversified and stable foundation for their reserves. With economic instability and currency diversification in play, silver's potential role in global portfolios is expanding. In the next section, we'll dive into how silver stacks up against other investments and why it might be a smarter choice in today's volatile landscape.
So people are losing their jobs just before the election, so they're not going to say that. But yes, they're seeing it for sure. And, obviously, but we mustn't forget that the inflation numbers are probably tweaked as well to make them seem a lot lower. I mean, it depends how you measure inflation, but the way I look at it, we've got the level of government debt rising by 7 or 8% a year at the moment. That's 7 or 8% more wealth on the planet, if you like. So how could the inflation rate be only 2%? Well, they're not measuring everything. I mean, if you ask the average Joe about his grocery bill or the price of fuel or what it costs to go on holiday, they won't tell you that it's gone down. They'll tell you it's going up by more than 2%. I'll give you one small example. I just had an email from Google telling me that my Google subscription is going up by something like 50% year on year, which they blame on inflation. Well, that's my YouTube subscription. So, I think wherever you look, prices are going up. the real sign about what's going on here is what's happening in the gold and silver markets. We've seen the gold price rising steadily for months and months and months. Every time it takes a little dip, people say, "Ah, it's time for a pause."
When considering where to put your money, silver offers a unique appeal that sets it apart from other asset classes like gold, real estate, and stocks. While gold is a time-tested safe haven, silver brings a mix of security and industrial utility that gives it an edge. Unlike stocks, which can be volatile and tied to specific companies or industries, silver's value is more universally recognized and less dependent on economic cycles. Now think about real estate. While property can be a good investment, it's far less liquid and can be costly to manage or sell quickly if the market shifts. Silver, on the other hand, offers liquidity and a hedge against economic downturns, especially in times of inflation or market instability. And in today's climate, where recession fears linger and interest rates are shifting, silver's role as a flexible, tangible asset is more valuable than ever. What's more, silver's industrial demand, unlike most traditional investments, gives it a long-term growth angle thanks to its use in technologies of the future. So, for those seeking a versatile asset that combines stability, liquidity, and growth potential, silver is standing out as a strong contender. But with everything aligning in its favor, what's next? In our final segment, we'll wrap it all up with Clive Thompson's big-picture outlook on why silver could soon reach unprecedented highs.
In more than a decade, the consumption of silver exceeded the mine supply. That was in 2022. So the mine supply, as of today and as of 2022, was less than it was a decade before that. The industrial consumption of silver had gone up and was more than it was a decade ago. The consumption of silver for industrial use, particularly electronics, is rising rapidly. Electronics are consuming around 20% more silver every year. So that silver deficit, which started in 2022, got much larger in 2023, is forecast to get much larger than that in 2024, is going to continue becoming larger. And that means that the silver price could go from here a very long way. We mustn't forget that we saw back in the 1980s a price of around $50 an ounce for silver. That was when the Hunt brothers tried to corner the silver market. They were trying to buy up all the silver they could lay their hands on. Unfortunately for them, the government changed the rules on them, or rather the exchanges changed the rules on them to protect the shorts, i.e. the bullion banks. They basically said, from now on, you're allowed to sell your contracts, but you can't buy. So as their contracts reached maturity, they were literally forced to sell, and they were prohibited from taking delivery of the silver that they bought. So that took the price of which was then 50 down to about the sort of $10 to $15 range, where it's remained for a very long time. Recently, we've been in the $20 to $30 range, but finally we've broken out of that trading range. And I think it looks to me like the combination of investor demand and the industrial demand will send that price a lot higher than it is.
All right, let's bring it all together with Clive Thompson's ultimate prediction. After examining all the forces at play, surging industrial demand, a supply crunch, gold's upward influence, and the looming possibility of a short squeeze, the path for silver seems clearer than ever. Clive Thompson, along with other financial experts, believes we're on the brink of a historic rally that could push silver to record-breaking highs. Imagine the potential, a perfect storm of economic uncertainty, currency diversification, and global demand aligning to lift silver to levels we haven't seen in decades. If Thompson's predictions hold true, silver might not just reach $50 per ounce, but could go even higher, setting new benchmarks for investors. For those looking to safeguard their wealth in turbulent times, silver stands out as both a hedge and a growth asset. So as we move further into 2024, silver's outlook is brighter than ever. Remember, while this information offers insights, it's essential to do your research and consult with a financial advisor. If you're ready to stay informed on the latest market moves, Subscribe now to follow silver's journey. Who knows how high it could go?